Hey everyone, in today's video, I wanted to once again remind people to please stop chart chasing. We are in a very different macroeconomic environment than we were for the previous 12 years up until about a year ago. And we continue to see a lot of people either not wanting to or somehow psychologically unable to stop chart chasing your favorite unprofitable technology stock. It has not worked for a year, and it's probably not going to work for some time going forward. If you look at the chart here on the screen, what we're looking at here is the 10-year US Treasury yield. And you can see if you go back to just the summer of 2021, we were roughly looking at a yield on the 10-year notes of somewhere around 1.2 to 1.5%. We're now looking at a 5% rate. We're in a very different environment, and just the way that market participants allocate money, the cost of money matters for everything, including discounted cash flow models, which is one way of valuing the net present value of future cash flows, streams of companies, bonds, and so on and so forth. So we are in a very different environment. And so I want to remind you what doesn't work anymore, and again, is not going to work for some time, and likely what is going to work and what has been working. So luckily, we have our market rover, which does what it does, which is tell us when something goes bullish trend. Look at the NASDAQ 100, told us to get long that in April of 2020, told us to get out. That's the end of the green chart background, up 88%, if that's all you would have done. More importantly, it told us to stay the heck out of it as of roughly mid-January of this year. It's been a great call. It's been a pain trade ever since. If you look at some of the more difficult names within that space. Look at, for example, Square. Again, this is one of those typical names that have just simply not worked for a long period of time. Same thing here. Market Rumor told us to buy it in May of 2020, pretty much without any sort of pause, reminded us to stay in it until roughly November, early December of last year. That would have netted on the Market Rover roughly, let's say, 280% or so. But since then, the stock's been an absolute disaster because chart chasing no longer works. It ended up dropping about 62%. So this no longer works. So you have got to lower your expectations of returns in stocks, which doesn't mean one can't make money. It just means one has to start looking for stuff that actually makes money, companies that have growth potential regardless. So one idea, for example, is a company like Palo Alto Networks, which, yes, it's a tech stock, but you know what? It's also a tech stock that actually has growth potential in this world we live in. This is a cybersecurity company. It's topical in terms of geopolitics right now, but it also actually has growth potential. Stock here, Market Rumor told us to buy this thing somewhere in the 260s. It's now up 620 bucks or so. It's up at 620, I should say, up 130%, and it remains bullish trend. But this is not Square. This is not your favorite chart-chasing, non-profitable tech stock. This is a company that actually works in this macroeconomic environment. So again, respect the macroeconomic environment. Look for themes that make sense. It's no longer 2020. It's also not 2021. For the past 12 months or so, chart chasing has stopped working, and it's probably not going to continue working, not going to start working again for some time. So look for things that have themes and take down your expectations of returns. You're not going to make 30% on your favorite tech stock in a matter of 2 or 3 days, which did work up until the early middle part of 2021 for a decade. It's done working. Look at Netflix, what it's doing. The company actually lost subscribers. We're in a different market environment.